if you could just introduce yourselves, what you do, and for when you do your introductions, Myles, if you could talk a little bit about digital assets and what your organizations and company does today, and what one advice would you give to traditional banks?
Sure.
Same for Damir as well.
Hi, good afternoon, everyone. Thanks for having us. So I'm Myles Harrison. I lead the product and go-to-market teams across AMINA Group. So who are we? We're a global crypto financial services group comprising of a Swiss bank. So we've had a full banking license and securities dealer license in Switzerland since 2018. So we've been in this game for some time. We also have an SFC licensed entity based out of Hong Kong. We were the first foreign entity to receive a crypto license in Hong Kong, which was incredibly difficult for us to go through that journey and obtain. So we were very pleased to get that. And we were also one of the first banks to hold a CASP license here in the European Union as well. So we have an Austrian CASP based out of Vienna, supporting crypto custody, trading, and staking to start with. We'll be expanding that to support lending capabilities, and we're also upgrading to get our PSP license. As a group, we provide a full range of products and services across traditional finance as well as crypto. We really are the trusted bridge between TradFi, CeFi, and DeFi. We're not looking to replace any of those, but we can see that users more and more want to be able to interact across those different ecosystems. And we've all seen probably in the news in the last few months in particular, that security still remains paramount. And trust and transparency, we heard earlier around trust, that is still vital in today's world. So that's a little bit about us. One piece of advice, I would say, I still meet some institutions that are sort of approach us and go, should we really start thinking about this now? Should we start thinking about how we accept stable coins? And our answer is absolutely. This is not going away. Some people thought it was going to go away. We've seen some of the global players that have sort of flipped and flopped in terms of their approach to digital assets. Larry Fink being one of the most famous examples. The world is moving on chain. It's moving on chain at a rapid pace. We talk about tokenization, but a precursor to that is stable coins, right? You need to be able to settle. To realize the benefits of blockchain as a technology within financial services. So if you're not already thinking about it or don't already have a strategy, whether it's buy, build, or a hybrid, then please speak to us.
Wonderful, thank you. Damir.
Hi everyone, I'm Damir. Historically, I'm a researcher actually from academia. I was doing research in machine learning called AI today, I think. And then I moved to banking for money. And from there, I worked about 5 years in banking. I was in charge of setting up all the user management and KYC systems, and also a bit of AI to detect fraud and money laundering. So at Treaser, it was a bank as a service in France. Then I moved away to found my own company for more money. And from there, I basically made a cryptocurrency from scratch. We built a blockchain consensus algorithm. We deployed it. It's all right. It's not the biggest one. It's doing okay. So we ended up with a bunch of engineers that are amazing, and they can build a blockchain from scratch. They can build banking systems. So now we're providing banking solutions for banks. And we're working a lot with also with stablecoin integration as well, because that's something we know. We know how to do it. And if I had a piece of advice today, I would say, don't rush it. It's not because it's fancy that you need to go into it. If you need a system where your users are free to trade the asset between themselves without any kind of limitation, but you only control the on-ramp and off-ramp, then consider digital assets. Otherwise, I think you would just lose time. That's it.
Thank you very much. And just remind us.
Of course, yeah.
Great weather.
So what we do is that we do a system for which works for offline payments, and of course which is compatible with online. So we have a number of security features which enable these things, and we've called our system Monetac. We've produced a proof of concept application, which I've showed this morning. We also have an application which uses a similar technology, which is hopefully quantum safe for holding digital identities, and which could be very useful actually for banking, because it makes sure the application That's an easy step. Make sure that the document is not duplicated within the application pool, but also uses our quantum safe signature to prove its authenticity. So you have a system probably that might be more secure than regular ID papers, and which of course integrates well into IT systems with AI for face checking, for instance.
Thank you.
Yes, ma'am.
So Brad already introduced himself earlier, so I'm sure we know Brad quite well. I'm going to actually ask a question of Bruno and Brad, actually. There are banks in this room who are looking right now at 2027. They have to do long list and short list and present it to the board for approval. What top 2 priorities would you recommend to these banks that they should prioritize in 2027?
Well, I would say probably integrate AI, but that's not my business. But also improve your security and probably use one of these quantum safe signatures to make sure that not anyone logs onto your computer or gets your blockchain hacked.
Yeah. Brad?
Yeah, thank you. The big thing, I think, is thinking more thoughtfully about the policy management regime. So anytime you implement a new product like digital assets, maintaining policy governance over the transaction is extremely critical. As regulations become clearer, hopefully, I know we're a little bit ahead of the EU in terms of regulation, but policy management, as you manage your relationships with partners who are actually helping issue stablecoin, manage it, doing your custody, that's a big one, key management, those are the types of things that you need to watch out for, and strategic decisions around, do I want this on my balance sheet or do I want a third party to maintain it?
Thank you. One to Myles. So there are banks in this room who are looking at stablecoin, they are looking at digital assets, but MiCA regulation and entering the market is actually seen as one of the blockers they feel. What recommendation and guidelines would you give to Tier 1 and Tier 2 banks who are thinking about what have been your experience and what would you recommend to guide them towards?
Sure. I mean, firstly, I would say I'm not sure it's a blocker. I think it's actually an enabler.
I'm agreeing with
Because
you,
for
but
the
they
first
see it as a
time,
blocker. Yeah.
we have a clear set of rules, right? And we know that banks are run by risk and compliance teams ultimately, particularly in the at board level. And for the very first time, we have a clear set of guidelines. Not sure about the comment around US potentially being ahead because Europe was, Switzerland was actually 7 years ago introduced a raft of regulations, but Europe has led the way in terms of bringing in MiCA well ahead of the US. I know they're accelerating slightly now, but I would say, we need to recognize that. I think just coming back to when you're thinking about solving a problem as an organization, I'm a product person at heart. That's what I've done in TradFi and now in a crypto bank. Really just making sure that you're solving something that the incumbent, you're doing something better in a way that the incumbent solution doesn't do. So let's take an example of this. We're seeing that, for example, SEPA payments in Europe, they move cross-border within the Eurozone. They're cheap, they're quick, they're efficient. Stablecoins are not really going to change the game there too much. That's why you're seeing in the US, where it is a nightmare to wire money cross-state, it is expensive. There's a lot of friction there. So they found a solution to a problem that can do something better. I think in Europe, we're sort of scratching our heads a bit, looking at how can we bring stablecoins to consumer payments. I think more actually will have a biggest impact in wholesale payments. We're working with the Bank for International Settlements at the moment as part of Project Agora. I think that's going to revolutionize how financial institutions move money between each other, right, across a single unified ledger. So my advice would be there, again, is just making sure that you're solving something that is a genuine problem.
Absolutely. Thank you very much. I'm agreeing with you because it's certainly for the banks that are considering the move, that's precisely the application that they're focusing on because of the wholesale part of the business.
Yeah, and I would also add, it's going to take it a bit of time, right? I mean, I myself have been in the weeds of the MiCA legislation. We've been implementing that for a European CASP. We also have to consider as a Swiss bank how we handle our cross-border activity, right? And how we make sure that we, we don't fall foul of the new legislation. And in some parts, it goes a lot deeper than some of the TradFi, particularly with, active solicitation rules. They're very, very prescriptive in MiCA, unlike in some of the traditional legislation. So yeah, it is challenging. I think as an industry, we need to continue to work together. But I think that, if we look back even in the last few years, it's a huge amount of progress.
One question to Damir and possibly Bruno. And then I'm going to throw it out, so get your questions ready. How do we build an AI governance framework that satisfies rigorous EU regulation oversight?
Well, there's the regulation itself. So usually what you want is not just to comply with exactly the EU Act, the AI Act or something like this. You want to go beyond. You want to make sure that customers feel safe, that your clients, that your partners, they all feel safe. So in practice, that usually means that you strip down the actual capabilities of your AI down to something very minimal. I think that's something we should not be afraid of. We should not expect a full ChatGPT to control the whole bank. It's okay to start with something smaller, more focused, more controlled. We don't need to do the huge jump right away. We can put all the guards, all the necessary technologies all around, and just make sure that you reassure your customers not much changes, it's progressive, and we deploy once we're sure that the previous version works. Don't rush. And if you do that, usually you're by definition also compliant, because compliance is also a level below that. That's what I would say.
Thank you. Same question to Brad.
What's that?
Same question to you. How would you build an AI governance framework that satisfies rigorous EU regulation?
I don't know that I can add a whole lot to that because that's pretty prescriptive. I mean, you've got to be very careful. But from an EU perspective, no. I'm sorry, I can't add a lot to that. Nice and simple.
That's absolutely fine. The mic is yours.
Yeah, maybe a little bit of a continuation on the previous question. So we discussed AI the whole day, many topics deterministic, but one word that hasn't been mentioned yet is hallucination, although I saw trusted AI output in one of the final slides. So maybe a question to whoever wants to respond here. How is your quest for zero hallucination going at the moment within your companies?
Any takers? No takers?
I can take this one. Zero hallucination, you can achieve only with very simple models that you can fully explain. So you know all the borders of the whole model. You know exactly what it can output in under certain conditions. If the more the model gets advanced, the less you can understand what's going on inside. And the more you sacrifice in terms of explainability. Well, there are ways to reduce the problem. For example, you can put pre-filters, post-filters. There's even some explainable AI stuff going on. But as soon as you assume that the model can do stuff that you would never understand, you can't even think of predicting this, of preventing any kind of wrongdoing here. So honestly, I would, when stuff is superhuman, I would, or at least beyond the realm of what you could completely understand in terms of model, I would recommend that you stick to recommendation and not to action. Or somebody else takes responsibility for pushing the button at the end. Because you will have hallucinations.
I will provide you with a controlled answer. The controlled answer is that we're being very methodical and conservative in the way that we're rolling out AI. So as we focus on AI right now is within our domain of expertise. It's within our own banking core application. So hallucinations aren't an issue at this point. Now, as we get into more of the agentic AI prompts, especially when they're going to be retail or commercial facing, as opposed to internal SDLC in decomposition, we are able to control the outputs because we know our code, we know our customizations, the customizations of our customers. And so that's not yet really a problem in the way that we are approaching the use of AI.
Well, I think it falls back a bit on our initial question. If there was some EU regulation on AI, I think the EU should say, well, maybe we should have AI agents to check the AI answers and outcome.
Okay.
Thank you. My question is to Myles. I've heard from several banks that they are planning to implement stablecoin transfers for cross-border solutions for their B2B customers. But I don't know, how does it work? Do they issue their own stablecoins, or they rely on something already on the market? How it works?
Yeah, I think we're seeing sort of different strategies in play at the moment in the market, right? So you've just seen an announcement from a company called Carrousel, who have announced a consortium with around 20, I think now, and growing, European-based banks that are clubbing together to create a stablecoin, similar to what we have with USDG, with Paxos and a number of players like AMINA. So I think banks will take different strategies. You know, JP have JP Coin, right? JP Morgan Coin that they're using as part of Connexus and their tokenization platform. We don't believe that banks, our own view is banks shouldn't have their own stablecoin. And for us as a bank, we give our clients choice of the world's top leading stablecoins. So we're sort of relatively agnostic from that perspective. I think what the banks are starting to realize, though, is that, and I talk to players, even some of the biggest players in sort of stablecoin infrastructure, who have attracted huge valuations in the last 12 months, that the challenge comes in implementation, in making sure that you can have compliance with existing TradFi rules. And what I mean by that is we can talk about travel rule and cryptographic proof of ownership of a wallet, but that's one part of it, right? We need to actually understand, you know, what are the source of those funds, what are those funds being used for, you know, all the stuff that we're all familiar with in TradFi. These worlds are colliding right now. And there isn't really, particularly for third-party payments, there isn't really a scalable solution at the moment. Particularly when you're going between like venues or traditional institutions plus self-hosted setups, right? That's inherently complex, and that's kind of like a bit of a race at the moment to see who can solve that. So yeah, in summary, we're seeing different strategies from different institutions. You know, it does make sense if you're a larger institution, you have the brand name and the scale and the trust. Maybe it makes sense to create your own. You know, but I think that you really need to understand, like, what are we creating it for? And how do we make sure we have interoperability, right? That's the key, interoperability between institutions, between chains, right? The world is now multi-chain, so.
Thank you. So I'll add to that real quick. Is it working? Can you hear me? Yes, I'll add to that real quick. So one of the outcomes that I talked about in using an operating system like ours that's connected into multiple services is giving banks the ability to not have to be their own issuer. They don't have to do what SoFi announced, right? SoFi, the big challenger bank in the U.S., announced that they're going to not only do tokenized deposits, but they're going to issue their own stable coin. I scratch my head, and I don't really fully understand it. To his point, I'm not sure I really see the advantage. What I'm interested in enabling is, okay, whether you have RLUSD or USDC or Tether, does anybody really care? I'm not sure. But if they receive, if a client at Bank X receives a invoice from someone at Chase Bank on Chase Coin, all they want to do is pay. And if they receive a smart contract to be paid on USDC, all they want to do is hit pay. So his point, I think, is spot on. It's interoperability. It's the ability to go in and out of the regulated account with ease, without friction. That's where I see things going over the next few years. So I don't think issuing your own coin is the end-all, be-all. I think it's buzz, it's pizzazz, it's a way of positioning yourself in the market. But I agree with him completely. Like, if you're not Chase, why are you doing that? Or if you're not part of a consortium. So that's why we've already announced partnerships. We need to talk to AMINA, partner with them, with Ripple to support custody payments, cross-border payments, tokenization, and multiple other organizations that you're going to be hearing from over the next 12 months. So the banks don't have to do that.
Can I add just something here?
Please, go ahead.
It's a bit tricky because if I'm in France, if I receive a payment in USDT, I need to send it back and tell the person to pay me in USDC because it's banned now. So interoperability is a real question. We need to think twice before saying that everything is smooth and smooth sailing. Same thing when it comes to USDC. Who has control over it? At the end of the day, it's a company, mostly in the US, and if they want to freeze an account, they can. So if tomorrow we want some kind of sovereignty, we also want to avoid this kind of stuff. That's what I'm saying.
Okay, thank you very much. One last question, and I'll let you go and have your coffee. I've got a really quiet. Nothing's coming from the back, I've noticed. I'm going to walk down to the back of the room and shake up the back of the room a little bit. One question from this group. Okay, I'm going to ask a slightly different question. If you have to take one bet back to your CIO, or if you're a CIO here, we're investing in 2027, what would that be based on what you've heard today? What's going to make your short list and long list? People. Very good answer. Any others? What about people? Is it, what type of skill set are you looking for? It is a genuine problem that banks are faced with.
Sorry to be between you and the coffee. That's, this question which we face for ages, and when we were talking about digital transformation, we need not a flexible but adaptable people who want to do that, who are ready to that, for that, who doesn't seek for stability, etc. And nowadays we see that in our industry, for example, juniors and middle specialists are struggling with these AI approach, etc. So this means that we have to have more mature, more capable people who will control of that, who will build, they call it like operation system around your AI instruments within your corporation. So that's completely another skill and another level. Frankly speaking, I'm also not on that level yet. So I believe that that's an investment we have to do.
Thank you very much. And a very, very good question that is coming in at the board level. Where do I find the people that is going to manage AI? And does any fintech organization have any training modules that I could buy? It's also another hint if anyone has training modules. I'd like to say thank you very much to the panel, not get between you and your coffee. And thank you very much for taking the time to sit here and answer all these difficult questions. Cheers.